Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a deeper look at some of the week's most interesting stories in the mining and exploration space. Joining me today is Nicole Adshead-Bell, Principal at Cupel Advisory. Nicole, welcome back to Kitco.
Thank you very much for having me, Paul. It has definitely been an exciting week news-wise.
It has. We have so much to get through because, of course, it is Liberation Week. US President Donald Trump unveiled his much anticipated tariffs with a blanket 10% tariff plus more for countries in which the US has a negative balance of trade deficit or other factors. As a Brit, I now have a 10% tariff on me. Nicole, you're Australian, so you have 10% as well. But wait, you also live in Canada, so you have 25%. But wait again, you also live part of the year in Arizona, so you have no tariffs. This ludicrous example highlights how complex this could get really quickly for products that have hundreds, if not thousands, of cross-border components like cars and, of course, mines. The headline for me was that Trump spent just 45 minutes in a self-congratulatory monologue in the White House Rose Garden as he announced the tariffs. Many other news outlets, however, chose to focus on the possibility that the tariffs could put the world into recession, particularly his tariffs on China jumped to 54%, and China retaliated with 34% tariffs on US goods. The US has complained for years that China keeps its currency artificially undervalued, which in economic terms has given it the absolute advantage of low labor costs and other costs, which has partially been responsible for hollowing out the US manufacturing sector. Nicole, Trump may be right about China's currency, but is this the right way to go about leveling the playing field?
I can understand a desire to level the playing field because governments, as we know around the world, they may not necessarily be unleveling the playing field in the terms of tariffs, but might have, whether it's Canada with the dairy industry, which is essentially an effective 300% tariff on import on any other dairy products from around the globe. And speaking as someone who lives most of the time in Canada, dairy cheeses in particular are extremely important. And so I think in typical Trump fashion, he's attacking the problem with a hammer versus some delicate negotiation. But what we're seeing, which always happens in a trade war, is you just see escalation upon escalation upon escalation. So the counterparties aren't sitting back and accepting this. They're obviously responding. And so in effect, what you're doing is making the global supply chain and the movement of goods, you're sticking up that process and making everything more expensive for everybody.
I mean, it's not like we haven't been here before. You know, I'm old enough. You're probably not. I remember the trade years of late 30s. And, you know, going back even further, let's say almost 100 years ago to the Great Depression, tariffs and trade war were a fundamental factor there that put the world into that big economic depression.
It's correct. But I mean, 100 years ago, we weren't as connected as we are today. And so the problem with the trade war is you think you're hurting someone else, but in effect, you're actually hurting yourself. And as you made the point, with so many different parts and products coming from different parts of the world, you might have something that's technically made in the States, for example, but is sourcing 80% of those components from elsewhere in the world. And so I think what this demonstrates is perhaps a lack of understanding that you see, it's not just in the States, you see it in government decision making around the world that don't really understand where their stuff comes from and how supply chains actually work. And again, you're attacking an issue, a very complex issue with a lot of shades of grey in a very simplistic fashion. And the law of unintended consequences, obviously, as you said, we've been here before, and we are more interconnected today than we have ever been. And so that is, I think, of great concern.
I think a very interesting wrinkle here and something very relevant to what we're doing right now is, President Trump wants more raw materials to be produced in America. He wants more mining in America, but mines bring in inputs from all around the world. And so at the very least, he's going to make mines more expensive to build. And in the short term, at least, he's going to increase uncertainty because, as you say, supply chains are going to be all up in the air. And so there's going to be, at the very least, a pause on any mine building as mine developers work out, okay, how much more could this potentially cost me? Can I get the parts I actually need?
That's true. I mean, one thing to think about with when you live in times of certainty like this, private companies will not make big capital allocation decisions. And that's really due to a lack of certainty as to what those big capital allocation decisions will ultimately cost. I think one thing also to draw everybody's attention to with respect to President Trump's, and I think a very positive discourse on mining. Let's face it, I don't think the average person had ever heard of rare earth minerals until President Trump started to talk about them in the context of Ukraine. Not that Ukraine has it's not in the top 10 anyway of global rare earth mineral resources. But I think governments forget and individuals forget that it's not only mining that you need, it's that processing to turn those products from mines into usable components. And that's the smelting and refining world. And unfortunately for the States and Canada and just about every country in the world except China, there's very few countries that have material in-house capacity to be able to process, whether it's even copper, obviously, which is the mainstay, the critical mineral and the mainstay of industrial life as we know it today. China controls that downstream processing of raw materials. And so if you want to become self-sufficient in your supply chain of more materials, it's not just more mines, it's more smelters and refiners. And as a point that maybe Canada should consider, it won't, because there'll be a lot of particularly environmental opposition against it. Canada is a country that is geopolitically stable. It has got abundant and cheap power. It's very sizable landmass, obviously, educated, skilled workforce. It would be actually a perfect home for a build out in the smelting and refining side of the mining business.
Well, I'm glad you brought up everybody's favorite critical mineral, or even though nobody knows what they are, rare earth elements. I've been to a rare earth factory, seen them processed into electromagnets at Eries in Wales, a couple of decades ago. Trump wants them from Greenland, as you mentioned. He wants them from Ukraine, as you mentioned, and from Greenland. There's been a big discovery recently in Kazakhstan. Nicole, what is the big deal about rare earth elements? They're not rare to start with, so what's the big deal about them?
They're not rare. I don't think, I would say the average market participant doesn't necessarily understand them. They're a suite of 17 elements that are critical in certain industrial applications. And you're right, they're not rare. China has the largest reserves. I think Thailand is second, Brazil is third, and Australia is up there. I think it's just, it's clearly a commodity complex that has been put in front of President Trump as critical and key. And it's, maybe it sounds sexy. That's why he's talking about it. But, I think that, with respect to the rare earth elements, and this is where China, it's just stepping back. China makes decisions for 50 years. Or even for 100 years. It makes very, very long-term decisions. And other governments, particularly democratic governments, where you have election cycles to deal with, and all you're really thinking about is the next election cycle. And particularly where mining is almost universally loathed, and you're not going to be unpopular as a politician about being hard on mining. I don't know how the rest of the world competes with China in terms of the decisions that they've taken decades ago to exert control over critical commodities, and not just mining of those, but processing of those. And so there's a lot of catch up around the world to do if you don't want, imagine if China just said, we're not exporting any more rare earth products, and the world has to scramble to build smelting and refining capacity. There's a lot of mines around the world, but then they have to scramble to build that downstream processing capacity. So, think about how long that would take, 5-10 years. So they hold the triggers of power in a lot of very important elements that contribute to the smooth functioning of the world as we know it today. Relatively smooth functioning.
Now, rare earth elements are sort of quite niche and unique, and so perhaps there's an issue of nomenclature here. Perhaps they should be called strange earth elements. And I don't mean to be overly facetious there, but I think that's part of the issue there. But generally, getting back to the smelters and refining, smelters and refiners, as you mentioned, they're not easy, not necessarily cheap to build. And presumably, if they're like metal refiners and smelters, they're probably not that profitable either.
No, absolutely not. And so again, it's basically governments need to be thinking about it as de-risking the ultimate supply chain is how I'd be thinking about it. And what we're seeing, what what's happening with trade wars is suddenly people start to focus on where are certain things coming from and what happens to me if I no longer have access to those certain components. And really the trade wars that President Trump has really ignited in a very strong way, it will harm the American consumer. I mean, as someone who has a slight shopping addiction, America is a wonderful country to go from a shopping perspective because it's a consumerist society. There's an abundance of anything that you can imagine, and also on a fairly cheap price point. And so everything starts to get more expensive. Obviously, consumer confidence is impacted, and that also has a downwards trickle effect. So this idea that this is only going to be result in short-term pain for Americans, I think is also fairly simplistic.
I recall I read that Walmart is already shutting stores. A lot of the product lines in Walmart are sourced in China. That company is already sort of taking big steps. Now, President Trump made a big thing about trade deficits during his speech, which he interprets as countries taking advantage of the US. What does the godfather of economics, Adam Smith, say about trade deficits? Smith said it was absurd to believe a nation's wealth depended on a trade surplus. He argued that trade, when naturally and regularly carried out, is always advantageous to both parties, even if the balance of trade is not perfectly even. He talks about productivity and adding value, such as the value the US adds to the raw materials it sucks in from Canada, Mexico and China to turn into things of high utility. Nicole, is Smith basically saying it's not what you bring in, it's but what you do with it that counts?
I think he's also assuming rather naively that that the playing field is equal, and it isn't. And I think that his thesis holds very true if you're not having governments give government subsidies to farmers or to workers, whether that's direct subsidies, whether that's in the form of tax breaks, whether that's in the form of making it difficult for certain other competitive companies internationally to compete with local domiciled product. And so, I think President Trump recognizes that there's an inherent unfairness and that there isn't a level playing field. And he's trying to deal with that, but dealing with it in a way that I think is just, it's making the problem worse, because this kind of behavior results in every country being protectionist. You see a massive increase in nationalism. We're seeing this in Canada. I mean, people who I would argue are very intelligent, well-rounded, thoughtful people that basically say, well, I'm never going to travel to America ever again. I'm not going to give any American my dollar. And so you're seeing this resurgence in nationalism almost in direct contravention of what you've seen in Canada over the last 4 or 5 years, where you've seen political parties, for example, that have said we shouldn't have a Canada Day. You've seen the same in Australia. So his behavior is also resulting in an increase in overt nationalism in individual countries.
The possibility of recession means precious metals analysts think gold prices will be higher for longer. There's a phrase we haven't heard for quite a while, and they're beginning to increase their long-term price assumptions, and therefore they are also increasing their target prices on gold equities. Nicole, it seems the worst-case economic scenario seems to be starting to play out, and yet there are happy faces around the precious metals complex. Why is that?
Yes, you're now seeing all of those companies, all those gold companies, including the majors, trying to say that they wanted to be a copper company when they grew up over the last 5 years, are now happy to be a gold company again. Look, in times of uncertainty, obviously gold is a safe haven asset. In these times, again, it is an attractive asset class. I would argue that the analyst community, look, they're always late. So the fact that they're getting positive on this now, when you look at their long-term forecast predictions on an average over the last 20 years, they've always been ultra conservative. So I wouldn't necessarily be just looking to the analyst community, but what the analyst community does is it brings in the generalists. And that's really what we need to see the next uptick in the underlying equity prices. So I think that we're in the we've been in the beginnings of a bull market, or I think in the early stages of a bull market for a number of years. I think much to the frustration, you're only seeing some of those equity performances reflected in the larger companies. So the smaller companies, and we've discussed this previously, the developers, they're not getting very much love. The explorer class, if you have a great drill hole results, it doesn't matter what asset class you're in. It can be an unloved asset class or it can be in a loved one. You will generate exceptional alpha performance, and it doesn't matter what part of the cycle you're in. But I think we're seeing very, very predictable behavior again, depending on where you are in the cycle. And we're in the cycle where everybody is starting to look at the commodity. They're starting to look about how to be exposed to that commodity. You're having investors demand growth. You're seeing increase in M&A. I just think kind of some of the toppy signs of a bull market ending is when you have a feeding frenzy in M&A, and when you start seeing that M&A interest really percolate down to the much, much higher risk assets.
I saw a very interesting Scotiabank chart this week that suggests none of the senior gold companies are yet trading at a premium versus gold bullion. In fact, they are trading at a significant discount, which suggests a large bull market for gold stocks could be coming. Do you think that rings true?
Yeah, absolutely. Look, we've had a sustained gold price rise. You haven't seen, there's been outsized performance, particularly in individual companies. I mean, you look at Franco-Nevada, it's performed exceptionally well. I mean, you as an investor can be investing in very safe, large companies that have performed very well in this gold price rise, and also a number of mid-tiers. I just think that will continue. And we have to remember that when generalists enter the sector, generalists, for them, a small cap is $1 billion. And so they'll be focused on the majors and the larger, more liquid mid-tiers. And that to me is when you see the generalists start to enter, they're the initial stocks that will outperform and see a lot more liquidity and share price performance.
Now, let's go from one ambitious leader making decisions a lot of people scratch their heads about to another and swing by Reko Diq in Balochistan in Pakistan. The imaginatively named UK-based mining services firm Capital signed a $60 million contract this week with Reko Diq for early civil works and the construction of the tailings storage facility. Nicole, Reko Diq is a massive copper and gold project, but one with material security issues in the shape of the Balochistan Liberation Army. What are your specific concerns about that project?
I think to some degree that Barrick, and this is something that you never want to do as a company or as a leader of a company, is kind of trapped itself going down a particular strategic route. Because Bristow has said that he's not going to pay a premium for anything. So that just means many, many companies, which makes sense. It's a like for like merger, but doesn't make sense for the smaller companies. So it's clearly messaged that it's ex M&A growth. And so it needs to generate organic growth, and it needs to generate organic growth that's material to the business. And Reko Diq, definitely, that is an awesome deposit. It is, if it had been in almost any other jurisdiction in the world, it would be operating today. And one of the reasons that it hasn't been developed, obviously, it's in a very, very high risk place. I would be very concerned. I'd be concerned as a board. I'd be concerned as a company. I'd be concerned as Capital Inc. that will be managing the initial project development. There's a huge amount of security risk. You've seen 2 attacks on privately owned coal mines, directly on coal mine personnel, and also on numerous attacks on the Balochistan Liberation Army is made it very, very clear that they feel that they would like to have an independent, autonomous state to govern. Interestingly, when you look at the ownership of Reko Diq, the Balochistan government owns 25% of that, but the Balochistan government is not considered to be necessarily representative of the local people. And for instance, the governor is the Pakistani federal government. They nominate the governor. And so just, you have these elements where companies will say, oh, okay, we've got this group involved. That means there's local widespread support. I would argue that in this case, that's not the case. And so I'll be thinking very, very carefully about sending people to a place where there's a reasonable probability that there may be attacks on those personnel. And what's a human life worth? It's worth a lot.
Okay, Balochistan has a 25% free carried interest, doesn't have to participate in project costs there. I had an hour-long call with Barrick Gold CEO Mark Bristow this week, specifically about Reko Diq, security, hearts and minds, and all things like that. That will be coming out in an article in Mining Journal next week, probably Monday. His thesis is that Barrick's early and continued social investment in things like water infrastructure, hospitals, schools, etc., local purchasing commitments, and a 6.5% NSR. 5% of that goes direct to Baluchistan and 1.5% effectively to Pakistan, and shared ownership to enjoy the $72 billion in free cash flow the project will generate is the path to success. Nicole, the economic rewards that Barrick is truly looking to share, I mean, they're absolutely amazing. They could be, life changing for the province, for people in the province, could put it on a development path. However, the anti-government forces, if you like, that's perhaps not necessarily what they're after or what they're looking for.
Yeah. And also often these economic benefits aren't necessarily accruing to local people. I mean, there's a huge amount of embedded, and this is a challenge that any company faces. And I would argue that mining companies anywhere in the world versus any other industry invest enormously into local communities, into infrastructure development, and have a lot of positive net impact. But you've seen numerous examples where all of those economic benefits hasn't resulted in local or community support. And so one thing to sometimes step back and consider is sometimes different countries and different cultures, they don't necessarily want what you think they want. And what you think is important to them isn't necessarily important to them. And so this idea that certain economic attributes will result in widespread support, again, I think it's kind of simplistic. And so I think it's fraught with risk. Obviously, you have Pakistani level government of support. You have a group of people that are very willing to enact violence, that are trying to demonstrate that they want autonomy and control. As a mining company, you're kind of stuck in the middle of that. And that's not a good place to be.
Well, and we have a very recent example of communities not necessarily wanting the economic benefits of a mine with Cobre Panama in Panama, of course. No violence really associated with that, but for other reasons, the mine was shut down. And of course, Reko Diq is going to be a monster. It will be in production for decades. And so that risk profile, that potential exposure is going to be there for a long time. So let's bring in former world heavyweight boxing champion Mike Tyson. Everybody has a plan until they get punched in the face.
It's so true. I love that quote. Yes. Yeah, because I do kickboxing. I've actually been punched in the face. It's awful. I cried.
Well, let's have some more good news. Russia said it is ready to contribute additional military support to junta regimes in West Africa's Sahel region. The Kremlin will provide weapons and training to a new joint force comprised of Burkina Faso, Mali, and Niger's ruling juntas. If Russia cannot play in the Western international community, I suppose it has to play somewhere where it can, and that seems to be the Sahel, where it can fill the void after the juntas pushed out American and French security partners. Nicole, it sounds like the Wagner Group is going to get supercharged now.
Absolutely. I mean, the concern for the mining industry is those companies that have operating assets and we've seen it with Mali, with a massive push from the government in terms of increasing their economic ownership or exposure. There's a lot of question marks around Burkina Faso. And I suppose what you have is a waning of American influence and an increasing of Russian influence. And so what does that mean for the plethora of natural resources that occur? Obviously, that sounds a bit harsh because there's a lot of other things that come with that, with economic instability, with security risks for local populations, et cetera, et cetera. But there is also, there's a potential material implications for the mining industry. And that would include the Canadian and Australian mining industry.
So it could potentially be bad for Western investments in those countries. So as an investor, are you on a sort of, wait and see sort of position at the moment there?
Yeah, look, I love Burkina Faso. I think it's one of the best countries that I've been to in terms of wonderful country to visit, incredibly poor. So you've seen this material positive on the subject of economic impact of what mining has done. And for a long time there, Burkina was one of the countries that had a very smooth, transparent and timely permitting process. And so you had an ability as a public Western company to come into that country and advance your project very, very quickly. And we've had some wonderful discoveries and some wonderful economic returns. And so for me, again, I think everywhere in the world is risky. It's just that risk manifests itself in different ways, and you need to be anything that you're invested in a country like Burkina Faso is going to be aware of, are there any early noises from the government that will have negative implications for the owners of assets within those countries?
Nicole, you are in Peru, so let's head there. Endeavour Silver is to expand into Peru through the acquisition of Minera Colpa and its Huacho Colpa Uno mine for $145 million US. Endeavour's production base is in Mexico, where it aims to produce 7.9 million ounces of silver equivalent this year. Colpa is expected to increase that by about 5 million ounces of silver equivalent a year. To fund the buy, it will undertake a stream on the copper from Colpa, a bought deal financing, and use its cash. Now, Nicole, this perhaps came as quite a surprise to a number of people, given that Endeavour is still building or finishing the build of its Terra Nova mine in Jalisco in Mexico.
I actually think it's a really smart move. We're in that period of time where investors are rewarding those companies that have growth and perceived growth, and Endeavour Silver, I think making an acquisition that has a material impact to its existing production profile and growth profile at a time where you're seeing increase in the underlying commodity price, probably a burgeoning interest in not just traditional resource investors in the precious metal sector as a whole. I think it's a smart move.
And what about the financing? Bought deal, cash, and a copper stream. I mean, it seems to be sort of throwing out the kitchen sink to be able to get this asset, to bring this asset in.
I think that's what you have to do in this day and age. The traditional banks are not necessarily there. From a risk perspective, from a time perspective, you have the streamers have really the kind of the diversified streamers, and that's not just the streaming and royalty companies, but the Orions of this world that can supply full financing packages and can move very, very quickly. I think as a company, you essentially you're basically as a management team going, okay, how do we carve up and not irreparably damage our equity structure in terms of growing or building assets or advancing our company? And so I think that combination made a lot of sense given the kinds of deal structures that we're seeing globally with respect to either building assets or acquiring them. It is almost always a combination of cash, some sort of debt, stream, royalty, whatever the case may be.
Okay. Now, does this deal suggest that producers are now starting to become more aggressive and actively looking for growth and being given the green light to do so by their shareholders and their board?
100%. I mean, we're already seeing with the immense competition for the Newmont asset sale and prices that were paid well in excess of expectations. Newmont's publicly disclosed expectations. All of those companies that missed out, they'll be sad about missing out. And obviously when you miss out, you tend to be a little bit more emotional. And so I think what you're seeing again, and again, I think this is very predictable, depending on where you're on the cycle, is there will be an appetite for producing advanced developers, and then you'll start to see that move down the food chain.
Okay, talking of aggression and staying in Peru, Alpayana has increased its bid in a hostile takeover attempt of base metals producer Sierra Metals. They've increased their offer from 85 cents to $1.11 Canadian per share, valuing share at about 235 million Canadian. The latest bid represents a 41% premium over shares closely priced the night before. Sierra operates the Yauricocha and Bolivar mines, with Alpayana citing the weak financial position of Sierra as the key rationale for shareholders to tender to its offer. Sierra ended last year with $96 million of debt, $28 million working capital shortfall as well. The largest shareholder of Alpayana is also a minority investor in Sierra's Peruvian subsidiary, which is called Minera Corona, to which Corona has a $56.1 million obligation. Alpayana said it would seek for the obligation to be repaid if its offer is not accepted. Nicole, it looks like Alpayana is taking gloves off and may be prepared to put the local subsidiary into bankruptcy in order to get its hostile bid over the line. What would you do if you were a shareholder of Sierra?
I would sell. Basically, I think you have. and I'm not a shareholder. I think you have to remember, if we look back at it, it's always good to be a target on the M&A side. I mean, often M&A from the acquirer's perspective doesn't work out as well as they thought it would. And we've seen numerous examples throughout the mining sector over the course of my career, which is long, unfortunately, is companies that said no to hostile bids, and particularly when the hostile bidder increases its own bid, probably live to regret that decision. So I would be looking at this favorably if I was a Sierra Metals shareholder.
Okay, well, it's I think the deadline there is about the 25th or 26th of April, so we've got a few weeks before we see how this is resolved or not. A lot of money closed this week. Go Gold Resources closed an $86 million bought deal. Free Gold Ventures closed a $42 million brokered private placement. Rupert Resources closed $28.5 million private placement, and Snowline closed $20 million of flow-through financing. Nicole, it's certainly very good to see some healthy raises out there.
Yeah, and that's a change, and a positive change. And on the subject of where we are in the cycle again, an increase in the volume and the scale of financings, and particularly for the developer class, and board deal financing, that shows that there's a lot of appetite out there. And I think it's all very, very positive signals for equity performance going forward.
Now, sticking with gold, Revival Gold announced a preliminary economic assessment for a 95,000 ounce per year open pit heap leach operation at its Mercer Gold project in Utah in the USA, following an initial capital investment of $208 million. Importantly, the company thinks it could complete permitting on the former mine site in 2 years. Revival bought Mercer last year. Nicole, with the development stage companies, as you mentioned earlier, largely being ignored by the market, it doesn't seem surprising that several are looking at other options to get into production sooner. If you were the CEO of a development stage company, Nicole, what would you be doing right now?
I would probably be taking a little bit of a different approach. Look, at the end of the day, if you're not getting rewarded for spending money reflected in your share price, then I would argue maybe you shouldn't be doing, unless you have a form of financing that is less dilutive than pure equity. So what I'm trying to say is, when you're a developer and you're completely unloved, and that's what we're seeing in the developer side of things, I think really the focus is on capital conservation. And if you have some exploration excitement that you can build, where you can distract the market and go, forget about this development asset, which you're all looking at and thinking that we have to spend material amounts of money, and maybe we have a weakened balance sheet, or our share price isn't where we want it to be, we're trading at material discounts to NAV, is if you've got some exploration, look at this pretty shiny thing over here, and let's try and engender some alpha excitement around exploration. Because at some point in time, the explorers will become very, very, very well valued. And we'll start to see that, I think, initially through M&A interest in the developer space. And then investors will want to be exposed to developers. The problem with being a developer, and this is very, very predictable, is unless you're in a bull market, the market doesn't really care. Even though, ironically, you de-risk your asset base, you have a wealth of information, you've completed economic studies, you have a real asset versus an exploration company, you'll generally trade at a material discount. And so you have to convince the market, in my opinion, is that you're not going to go forward at all costs. And by that, I mean dilute your existing shareholders into non-existence. And sometimes management teams are very focused on advancing the asset versus sitting back and going, where are we in the cycle? What is our underlying value versus that asset value? Are there any creative ways that we can manage our business so that we're not destroying value for our equity shareholders as we're waiting for that real underlying defendable value to be reflected in our share price?
Now, Revival Gold.
That's not an easy thing to do, by the way.
Okay. Now, Revival Gold, of course, was previously the sponsor of Digging Deep, so it's good to see them advancing. Now, another company announcing a shiny thing this week, and if you're going to get onto next, it's been a week of inflamed passion, so let's throw a bit of water on that and damp things down a little bit. Copper development stage company Hot Chili released a preliminary feasibility study for an expandable 500 litre per second seawater supply project for its Costa Fuego copper project in Chile. It has designed the project to be multi-water user business in its own right, and it's called Huasco Water. The first stage would supply 500 litres per second to Costa Fuego, following an initial capital cost of $151 million US. Nicole, full disclosure, used to be chairman until recently of Hot Chili, so I have to mention that. That wasn't why we're doing this segment, but Nicole, sourcing water is one thing, and obviously each mine development has to do that. But why has Hot Chili gone to the length of forming a water company to do so?
Yes, and I should note that I still own a lot of shares, so not necessarily unbiased in my opinions here. Look, the water represents, I think it's a very creative way to highlight, number one, the value of water. Globally, but particularly in Chile, and to look at that water business, which is essentially a water license and existing right-of-way infrastructure, as a business that you can generate some value from, and trying to get the market to realize that it has a huge amount of embedded value. And so I think what the company has done is very positive, which is releasing the PFS and said, with at one point in time, obviously, this is what we think this asset is worth today and what it could be ultimately worth if we become the future water supplier for the region. And the reason why that future water supplier thesis makes sense is that in Chile, you cannot extract groundwater. You just cannot do it for mining purposes anymore. So any water that you need to use in mining for processing has to come from the sea. To get a seawater extraction license takes a decade. And so you just think about that in terms of the impact of your timelines and the impact to your MPV. And then you look at other development projects in the region. None of them, and this is all public information, none of them have even started the water permitting process. And so what Hot Chili is trying to do is to say, not only do we have a water license for ourselves, but we are a potential water solution for that part of the Huasco region. And there's an awful lot of excitement and development projects in that part of the world. And also the government, it's a story that's resonating with the government as well, because the government doesn't want to see every single individual potential water user, number one, get their own marine concession, and number two, build all the infrastructure that's associated with that on an individual basis, because obviously there's an environmental impact that comes with that. And so there is a lot of support for this concept of having a water business that can solve a lot of water issues, and not just for the mining industry, but for communities in the region. It's a very, very water poor area. And I think we've talked about this before, but the transaction to the north with Antofagasta selling its water assets is kind of a pinpoint in value. But obviously, it's a two-way street. The water business is only worth something if there are clients that can draw from that water business. And I would argue that Hot Chili, and I think it's messaged this very, very clearly, it's not planning on building this water business itself. It's the aim of releasing the PFS is to very clearly send a message to the outside world, this is what we have, and ultimately attract a partner with which to advance that water business concept.
Now, building water infrastructure is expensive, and this PFS shows that it's also profitable. I think it talks about a 19% post-tax IRR. I interviewed Hot Chili CEO or Managing Director Christian Easterday almost a couple of years ago now when they first launched this idea. That video is in our YouTube archive, so please look for that if you're interested. Nicole, and this PFS would seem to open the door for Hot Chili to bring in a specialist water utility to finance, build, and operate their water supply.
Absolutely. And if you dig into the details of the Antofagasta transaction, interestingly enough, some of the financial backers of that, because when you think about it, the water business it's almost an infinite asset, because your mainstay commodity, if you will, is seawater. And so the investors in the Antofagasta acquisition were Canada Pension Plan, British Columbia Investment Corp, and Canada's largest pension plan fund. And the reason for that and why it would be attractive to pension money is because of the long duration nature of that asset class.
Excellent. Well, this has been a massive amount of news to go through, but that's it for this week. Finally, Nicole Adshead-Bell, thank you very much for joining me today.
Thank you very much for having me, Paul.
And don't forget, if you like what you see, to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.